We're live.
Good evening. Can I welcome those online to the meeting of this Audit Committee? My name is John Barnes. I'm the Chairman of the Audit Committee. To my immediate left is Lorna Ford, the Chief Executive. You'll see her to the right of me. And on my right is Charlotte Spenley, the Head of Finance. I would also like to welcome our new independent person, Tom Davis, to his first meeting of the Audit Committee. Welcome, Tom.
Thank you, Chair.
I hope you will make a very valuable contribution to our discussions. Without more ado, can I, first of all, get your agreement to the minutes of the last meeting? Yeah, that's agreed. Proposed by Terry Byrne, seconded by Polly Gray, unanimous vote, I think. Excellent. Apologies for absence. We have apologies from Councillor Cooper, to whom I think we should send our good wishes. She is not particularly well at the moment. Additional agenda items, there are none. I think that really brings us on to declarations of interest. Councillor Thomas.
As the Chair of the Housing Company, which is relevant to items 6 and 7 in particular, but also in items 6 and 7 there's an awful lot that's not about the Housing Company. And therefore, we had a conversation before, and I'd be grateful if you would do as I suggested, namely that if the Housing Company comes up for detailed discussion, I will of course leave the chamber, but I would like to be present for the things that don't concern the Housing Company.
Yes, I think that's workable. We probably will go into closed session for at least one of those items. And if the discussion turns to the Housing Company, I will ask you at that point to leave, because there is much in the item on which your comments will be valuable, useful, and relevant. So I've also had a gentle reminder that I must ask for a proposer and seconder for the recommendations. So I will be scrupulous in so doing, and I hope you will quickly put up your hands. Thank you very much indeed. That, I think, brings us to agenda item 5, the statement of accounts. The Planning Committee, the National Scheme of Delegation. Now, we have a difficult situation here because in order to fulfill the government's timetable, you're going to have to recommend the detail of these changes for me to agree on your behalf. But what I will allow at this moment is a relatively free-ranging debate, because I know one or two people have views that they wish to express on this. Who wants to go first? Councillor Thomas.
First, I'd just like to say that I know from a previous discussion that Councillor Byrne is not necessarily of the same mind as myself, but I think everybody would agree that we have no option but to approve this, because it's a question of bringing the constitution of the council in line with national policy. And we don't really have much choice about that, do we? We're going to operate legally. At the same time, I think the feeling is widespread that this is not altogether desirable in all respects. And in particular, by removing the right of ward councillors to refer matters to the Planning Committee, it does diminish the degree of democratic responsibility of the committee to the people in the general population. And we received a suggestion from a parish council that one of the changes that could be considered is that ward members could be amongst the people who might be on that sort of small subcommittee making the decision. And I would say that because the community tends to relate directly to councillors rather than to officers. And so I would like us to recommend Cabinet to consider making it clear that they also support that kind of move and that they regret the extent to which some, probably 15 to 20% of applications now come to Planning Committee will be determined by a small number of people instead. So my suggestion is that this committee recommend to Cabinet that it also expresses an opinion about the undesirability of the democratic implications of these proposals. Thank you.
I will ask for a form of words at a later stage if your suggestion finds support. Yeah. Mike, you wanted to say something about this by way of introduction, I suspect.
Thank you, Chair. And certainly the comments that have been made, I recognise those from speaking to many of you and also to colleagues, peers elsewhere. I think I would urge some caution around the idea that it's the ward member that is the nominated member, and I'll explain to you the reason why. There's some guidance that has been published by the government in association with this draft statutory instrument, and we have to, as a council, have regard to that. That's very, very clear, and it says, this is paragraph 10, if anyone wants to look it up, for the purposes of considering referral of applications to committee, the nominated member should be the chair of the planning committee, or where such a role does not exist, the vice chair or equivalent member. We do have a chair of planning committee, so we have to have regard to that guidance. The other thing is, I'll just urge some caution as well. We've got 2 elected members for each ward. Which member do we approach? There's potentially some differences in approach and consistency with the sort of methodology that's been outlined, whereas our planning committee chair does have a good level of planning knowledge. I would also say that it puts ward members under some pressure, potentially, and also I would sort of suggest is that in line with good governance principles, effectively. So yeah, I would take you back to the guidance. It says, for the purposes of considering referral, the nominated member should be the chair of planning committee, and it goes on. You know, I'm aware of the sort of local implications, but that is not different to us than it is to any other authority in England. Thank you, Chair. I know that's probably not the answer you wanted me to give. Thank you.
Yes, I think the problem is that most of us, and I do serve as a surrogate member of the planning committee, most of us feel that this is unnecessary legislation, in that the planning committee actually is quite as stringent in most aspects as their officers. And where they overrule the officers, very often at appeal, their view has been upheld. They do make mistakes, all members make mistakes, but actually our track record on appeal is very good. That said, that is more for the planning committee and perhaps for the LGA than it is for the audit committee. My own suggestion from the chair is not that I did have a conversation with the parish council that put up this suggestion. Their initial suggestion was it should be the ward member. I explained precisely what you did, Mike, that really it would be invidious to eliminate the chair of planning. My suggestion is in the wording that the designated officer and the designated member should take their decision in consultation with the ward member. That would allow the ward member a role in giving advice, but he would not be taking the decision, which would fall to the chairman of planning and the chief officer. And that's something perhaps that we might advance as a suggestion to the cabinet, if that found support. Councillor Byrne.
Thank you, Chair. Yeah, I think that's an excellent idea in that the ward member will understand the way in which the discussion has gone between planning and the officer to take it back to their residents. So we're not trying to shoehorn a member in to be part of that decision, but merely make sure that they're fully cognizant of all the factors that have been taken into consideration. We're going to be the ones who take the brunt initially when people object, and it's always better to do that if you have full knowledge of what went on, and whether you defend it or not is up to you. But I think it's to do so with a full understanding of how the decision was taken would be very useful.
Councillor Thomas.
Yes, I fully endorse your idea, John, and Terry's statement on this, and I think it would meet Mike's objection. What Mike had to say about it being a burden, of course, that is the responsibility of the ward member. That's precisely what our job is. Sometimes we are intermediaries, and we are under pressure from two different sides, but that's part of what we do as councillors. Thank you.
Thank you for that. I think, therefore, what we're doing is recommending to me as chairman that we put that into the constitution, and clearly it's for cabinet to decide. So all we can do is recommend. Ultimately, it will be for council to decide rather than cabinet. But the wording that goes to council, we will try and include that amendment and see what council think of it. Is that seconded? Yes. Councillor Thomas, I think. Seconds. Those in favour? Sorry, is there anything else that you want to query on the recommendations 1 to 4? The first of these is where the amendment is made. The second is reflecting the new statutory amendments in the council's constitution. The exact wording you're leaving to me in conjunction with the chairman of planning and Councillor Killeen. And 4 probably does need just a little consideration, because it would eliminate all conditions attached to listed building consent.
The other point, which I made in the pre-meeting, is that there is a clash between the new council policy of respecting the rights of nature, particularly trees and rivers, but nature in general, and of course this document, which in a way downgrades the rights of trees. It's true that trees have not come to planning committee very much, or indeed hardly at all in the past, but we can anticipate that with the sort of pressure there is behind recognising the rights of nature in many councils and also nationally, that these issues are likely to come to the fore in the future. So I would just like to add a sense of regret that important issues around trees will no longer come to planning committees under any circumstances. So I'd like to propose a comment to that effect, Chair. Thank you, Chair.
Councillor Gray?
I would just like to support that comment. Thank you, Chair.
Are you proposing anything?
I understood Councillor Thomas was proposing, so I would like to second it, please.
Ask for the substance of what you're proposing. Yeah. Can you find a form of words?
And let me see, that we would signal our regret that under the new regulations, the rights of trees the issues around trees will never be permissible at planning committee.
We will minute that concern. I don't think we need to
Yeah,
say
fine. Yeah.
anything to cabinet or council about it.
No, be fine.
Yeah, excellent. You will both obviously have a chance to speak at council on the subject. Matt, do you want to make a comment?
Yeah, just on the matter of trees, just to be clear or to clarify that the impact of developments on trees is still a matter to be considered by the planning committee. It's just those applications for, well, as in the fourth recommendation, tree preservation orders, it's those applications that would not be able to be reported to the committee. So, you know, your large housing developments, if it's an ancient woodland or protected trees, is most definitely a material planning consideration. Thank you.
Thank you very much, Matt. Can I therefore now have a mover to recommendation 1 as amended, recommendations 2, 3 and 4? Councillor Gray is moving, Councillor Thomas is seconding. Do we all agree? Let's vote. That motion is carried. Now we go on to the draft statement of accounts. I think this is where we may need at some stage to actually go into closed session, because I think some members may wish to refer to specific figures, some of which may be confidential. However, I'll judge that from the way the debate goes. Who wants to speak first on this issue?
Ola will introduce the paper.
Oh, yes, sorry. I ought to ask Ola to introduce the item.
Hello, the report I'm presenting is the statement of accounts. So the report addresses the main issues affecting the Council's draft statement of accounts for 2025-26. The report was published on our website on the 30th of June, and audit has already started on these accounts. The planning stage started in March, and the main audit started a few weeks ago. So it's well underway at the moment. There are no changes to the presentation of the accounts since last year, and there are 4 main statements: comprehensive income and expenditure statement, movement in reserves, balance sheet, and the cash flow statement. In addition, there is also the collection fund statement at the end of the report. The CIES, the comprehensive income and expenditure statement, is a report which shows the performance for the year, and it is intended to reflect the private sector practice and accounting practice. However, the figures that are there are different to the ones that members would have been accustomed to throughout the year, especially at Overview and Scrutiny Committee, because they include a number of elements which are not reported throughout the year. For example, they include non-revenue items such as capital expenditure and anything to do with capital expenditure and things like depreciation, amortization. It also includes grants which are capital in nature. Overall, for 2025, the CIES shows a surplus of £11.2 million, which is in contrast to 7.2 million deficit last year. The huge swing is nothing to do with the performance as such. It's basically the fact that last year, in 24-25, we had a large loss in relation to the transfer of land relating to Blackfriars, and the transfer was to the housing company. This year doesn't include it, that's why there's a large swing there. Also included in the accounts is an amount of £758,000, which was written off in relation to two projects, especially, and they were the Town Hall Renaissance project and the housing, potential housing development at Old Lid Road. After some additional adjustments to that figure, we come at the bottom of the statement at a surplus of £10.5 million surplus. As I said earlier, the comprehensive income and expenditure statement includes a lot of items which are not normally monitored throughout the year because they do not affect the council taxpayer. They are then removed in the movement in reserve statement, and they then show, the statement then shows how much our reserves have actually moved during the year as a result of the council operating activities. So the things that are removed are depreciation, revaluation, amortization, movement in values of investment properties. These are the ones that are not supposed to be affecting the council tax payer, therefore they have to be by statute removed. As a result of these changes and these movements, large surplus, which was in the CIS, is then translated into an overall draw from the general fund reserve of £2.2 million, which means that the general fund, which was £5 million at the beginning of the year, actually ended up being 2.7 million. This shows the pressures on our budgets and the need, highlights the need for us to closely monitor our budget challenge, which we introduced and which we are monitoring throughout the year. The movement in reserve statement also shows that whereas we have had a decrease in the general fund, we have also had an increase at the same time in the earmarked reserves, and that is because some of the reserves that we have are ring-fenced for specific purposes. So, for example, that was the result of some revenue grants, for example, which we received in respect of, for example, resettlement status, resettlement programs for Afghan or Syrian refugees. Also, another reason for the increase in earmarked reserves was the fact that we decided this year to ring-fence the interest receivable from the housing company loans. When it comes to the balance sheet, the overall position of the council is that the net growth of the council has increased by £10 million, which is exactly the figure that we can see on this at the bottom of the CAS statement. That increase is made up of £5.2 million increase in usable reserves, mainly to do with capital grants, unapplied reserves, things like, for example, SIL income, which has been recognised but hasn't been spent yet, and also a similar £5 million increase in unusable reserves. The cash flow statement shows that we had at the end of the financial year, we had slightly more money, I think a couple of £1 million more money in the account. However, the cash flow statement basically shows us where we were at that point in time. Overall, the balances have been coming down over the years because we've been using them to support our capital program. As I said earlier, at the end of the statement, there is a collection fund income and expenditure statement, which reflects the statutory requirement of the council, which collects the council, local taxes to maintain a separate account in relation to business rates and the council tax and the distribution. Overall, the collection fund balance at year-end was a deficit of £85,000, which was a change of change from 1.6 million deficit the previous year. What we have to remember here is that when it comes to these balances, we only, the rather part of them is only a percentage of those amounts, because obviously the main share of those belongs to East Sussex County Council and the other preceptors. Just like last year, we had consolidated accounts, which consolidated the figures and the performance and financial position for the housing company. Basically, they show the combined statements for Roda and the company by eliminating any balances or any transactions which were between the two entities. Overall, the balance sheet shows that we are still in a sound position. However, it is really, really crucial due to the reducing amounts in the general fund reserve, that we have to really make sure that the savings program that we have been undertaking and which we are monitoring are achieved in order for us to be able to sustain our position. Any questions?
Thank you, Ola, very much. Councillor Thomas, I think you were worried about those paragraphs about the movement in reserves. Does Ola's clarification of what's happening?
There's an interesting exercise that I remember I was once in a group where we had to raise our hands the moment we didn't understand something that had been said. And it's just me. I just don't understand, quite simply, some of the statements. I'm sorry, but I don't. And I think it's part of our job as Audit Committee to really know and understand exactly what's going on. So I'm confessing honestly that I don't understand some things, okay? And in particular, I don't understand, for example, what you said about the reserves, where you talk about how we've got 5.2 million in inaccessible reserves, 5 extra million in usable reserves, and then later on you talked about the reduction in reserves. So there were various things that you were saying, but I wasn't really able to follow how it all works. And so I'll be very grateful, really just grateful. It's just this one page, okay, page 14, where I have this difficulty. And once you've understood that page, I think all the rest makes sense, actually. Yeah? So if people wouldn't mind, I'd like to spend a bit of time on that page 14, and I'd like Charlotte and Oda together to sort of to talk us through exactly what's happening so that I can understand all the different terms, what's up, what's down. Because it does seem one moment we're saying, oh, look, this is better this year because of this, it's worse this year because of that, and overall it's this. So I'm just asking for some more clarity. But I want to emphasise I've got complete confidence in the Treasury team that you know what you're doing, you understand it, and I'm sure it makes complete sense. Okay? So I just want to emphasise that.
I think the problem is with paragraph 10, and what we do is we include in the budget, as I understand it, the servicing cost. That's what the minimum revenue provision is. To put it as simply as possible, it's more complicated than that. But it's an accurate statement of what we have to do. And I'm not sure that a fuller explanation would actually make it any clearer. But Charlotte, would you like to try?
Yes. I mean, firstly, I want to thank Ola for taking everyone through in such a detailed way. As Ola's already touched on, something that firstly, I should say, we would not wish to present the accounts in the way that we have to present the accounts. We are governed by regulation and we must present them in the way that we do. We will always endeavour to try and make things as clear as possible. We're a very transparent authority and we would always seek to do so, but there are certain rules that we have to abide by and the accounts are very much governed by those. So, as Ola already said, the CIES, which in old language would have been your profit and loss statement, we have to put certain transactions through that statement because of the regulation. And in the movement in reserve statement, we reversed some of that activity. And the reason that there are those two different things is the CIS, the profit and loss statement, which gives that snapshot of, if we were a company, profitability in year, has to include that activity under regulation, but the movement in reserve statement requires us to remove it. And the reason there is those two distinct things is, one is trying to reflect what under international accounting standards you would report, and the other is trying to then translate that and say, but actually, nobody wants those things to impact a council taxpayer. And those things are things like depreciation or amortisation, which is really the same as depreciation, but for a different class of assets, gains or losses on investments, just losses on disposal, because they can be really in your financial position. And if council taxpayers were to be subject to all of those swings, then it would mean that your council tax level would not remain at a steady state. It would become very volatile, which nobody wants, which is why we have a statement that forces us to include them, and then another statement which asks us to reverse out those entries so that we can get to a position which is more reflective of that to which the council taxpayer is chargeable to the council taxpayer. Minimum revenue provision is it's a reflection of some of that activity. So the minimum revenue provision that's cited in paragraph 10 is about the debt that we raise and the principal repayment of that debt. So it does cover some of the activity, but not all of that activity. I don't know if that's made that easier. We do talk about different classes of reserves as well in the movement in reserve statement. So we have the general reserve, which is our reserve that Ola's already mentioned, that we drew 2.2 million. There's about 2.7 million left in it at this point. That is our reserve that we can use for any purpose, and it's the reserve that typically we've been drawing on when we've had in-year pressures or we've been unable to balance our budget for the coming year. We also have other usable reserves, which we call earmarked reserves. Now, they have a defined purpose. Sometimes the defined purpose is defined by another body, so it might be that we have received a grant that we need to use for a specific purpose, but we're unable to use it in year. So, as Ola mentioned earlier, we have had resettlement monies for some households that we are supporting. We get a lot of that up front and we draw it down as we use it. Other earmarked reserves are earmarked by us. We may have a strategy or we may have an initiative that we make a commitment to in year, but we can't see it through in year. It's delayed or it straddles more than one financial year. So we have earmarked reserves for those purposes. And then we have unusable reserves. And again, they're not sums of money we draw on for revenue pressures or to balance our budget. They are more geared towards these technical accounting adjustments that we have to put through. So that might relate to the pension fund or it might relate to capital expenditure. The 11.267 and then the reduction down to 2.7 and I think about £7 million in the other usable earmarked reserves off the top of my head. Those are about those council tax setting adjustments that we have to make. That was quite a long explanation. I don't know if that's made it any clearer or not. We would, these are draft accounts. You will adopt the final accounts after the audit is conducted. If members would like to have a kind of really detailed session to run through things offline, Ola and I would be happy to meet with you to facilitate that as well. Hopefully that helps clear up the reserves position.
I think some training might be useful, but that was a very lucid account of my basis. Councillor Byrne.
Thank you, Chair. I've just spun on to page 31, where it talks about what the audit committee does or doesn't do. Now, it's wonderful if all councillors or as au fait with accounting procedures as our accounting team. Whether we'd ever achieve that, I don't know. Doesn't mean we can't comment, but I think we have to comment within the framework of an audit committee. The other thing I would say is that I've always found local government accounting a dark art. I mean, in ordinary accounting procedures, things like provisions and accruals, it seems a lot of the movement that you have described could be within provisions and accruals in a more normal, not normal, but let's say a civilian balance sheet on an ordinary company. Provided the audit, just reading here, it says what an audit committee's purpose is, said to provide independent assurance of the adequacy of the risk management framework and the control environment. So I don't think we need to understand each number, but the explanation that both you and Orla have given us, I think, certainly gives me the confidence to say that, yes, the framework we have is managing all those things adequately. You weren't stuck with that, oh, I don't know quite where that money went question. So, and again, it says about the audit committee to provide independent scrutiny of the authority's financial and non-financial performance to the extent that it affects the authority's exposure to risk. And I think we're probably about to come on to that. But no, there must always be this difficulty. We can't train every member to be an accountant. It wouldn't be appropriate. So thank you for the level of detail you give us, but please be aware that sometimes we're going to get bogged down in some of the terminology. It's not your fault, it's not our fault, it's just the way it is. Thank you.
It's also a complicating factor now that we host certain funds which have to be spent by other bodies. So it's getting more complicated rather than less. Councillor Biggs.
Thank you, Chair. When we first started the council 3 years ago, the general reserves was said that you shouldn't fall below £5 million. We're now at 2.7. One, is that going to be enough for the next financial year? Or will we end up with a zero balance? Obviously, we've written off nearly £1 million in projects that never come to fruition. So obviously that's there. I think we're going to go into closed session when we talk about interest that we should have got, but we haven't got yet. And also, I'm looking down here, it says at the moment we have got outstanding loans, 53 million from the Public Loans Work Board and 7 million loan from Wilton District Council. Now, as we know, there is a possibility that as from 2027, we will no longer exist. So where do them loans go to, or how do them loans get repaid back?
Thank you, Chair. Okay. Will £2.7 million be enough? Let's start with that one. So there is no. So it may have been someone's view. It may have been my predecessor's view that £5 million was the number that we should aim for. But there's no defined number. There's no calculation that sits in the background and tells you you've got the right level of reserves available to you or you don't. It's a matter of professional judgment. And when full council sit in February and consider the council tax, one of the statements that comes forward to you at that time is the 151 officer's view of the adequacy of reserves. So it will be an assessment that I'll need to be undertaking. And when you take the decision about setting the budget and setting the council tax level as full council, not the audit committee, obviously, you need to have due regard to that statement. Those are our respective responsibilities in that regard. 2.7, so, sorry, I'm struggling with my words. 2.7 million is less than I professionally would like the authority to hold. And the reason I say that is an item we're going to come on to later, and it's the risk that we face. If we were undertaking just normal day-to-day business activity, then I think I would broadly be of the view that whilst 2.7 million is not a large sum of money, if we were just undertaking our normal operational activity, it probably would be adequate for the forthcoming year. However, we are not in a period where we are undertaking normal day-to-day business activity because we're operating that and we have a very significant loan, as you've noted yourself, with the housing company. And that's what, it's that particular position and the risk that we face in regard to that that gives me more concern about the level and the adequacy of our reserves. We have, as Ola has already mentioned, commenced a pretty ambitious savings programme target for the coming year. And we are going to have to look in year as well at the budgets that we've already set and where we are spending our money. We're also undertaking other activity, such as we're reviewing earmarked reserves at the moment to identify if there are any earmarked reserves that we'd previously earmarked for a specific purpose that could be released and used for another purpose or transferred to the general reserve, which may indeed increase the general reserve balance. So we will be evaluating all options this year. But I am concerned about the level and the adequacy of reserves for the coming financial year and budget setting process. In terms of the write-off of the schemes, it was appropriate that we wrote those off because we have a duty to assess them. The auditors are very interested in capital schemes which have stalled or can no longer progress in the way they were intended. And we undertook that evaluation and we determined that it was appropriate to write them off because they were no longer going to proceed. The costs that we wrote off related to elements of the scheme were no longer going to proceed in the way that they had intended to do so. I would not expect that to occur again in the current financial year or the coming financial year. I'm not aware of any significant capital schemes of that nature that we would expect to write off. So in some ways, with the Hermes and those schemes, we did have a fairly exceptional year. We'd also set a budget with some income targets. Those of you that serve the Overview and Scrutiny Committee will know we'd set a budget with some income targets, particularly around planning, which weren't achievable. We would have needed sort of some really positive market forces to get us there. And those things combined are largely what's hit our general reserve in year. I wouldn't expect those things to reoccur in this year. So there's that. Interest, I'm assuming there you're referring to the housing company interest. We have put that into an earmarked reserve rather than take that gain in year. That again is a professional judgment that I took. And that is solely around not relying on income that we haven't yet physically got cash income for. So it is in an earmarked reserve, and I feel that that's an appropriate way to treat that particular transaction at this time. As that money flows into the council, we can release that into the general reserve. But as you'll be aware, we need other things to fall into place, namely open market sales, in order to achieve that position. Yes, we have got a much higher level of outstanding loans than we had the year before, as Ola touched on in her introduction. We have an ambitious capital programme. A lot of that is delivered through grant funding. We've utilised the cash balances that we had from that grant funding, and the other major source that that's funded from is borrowing. And therefore, we have had to take borrowing in year, significant amount of borrowing in year, in order to fund that scheme, and there's more borrowing anticipated in the coming year. I think that addresses all of your points, but if I've missed any, then do let me know.
No, thank you for the explanation. It's good to have, because obviously if I'm a member of the public reading this report, which is what you can do, it's good to listen to the effects that you've explained stuff more easily than someone just reading this. That's why I like to ask the questions, so at least the public then get a defined answer to the questions and not just look at a bit of paper and think, what's all that about? So thank you for your explanation.
I think it's worth just reminding ourselves, we had a full internal report on the town hall project, which didn't make totally comfortable reading. So this is the inevitable consequence. The one that you didn't refer to is King Offer, and presumably if we are going to sell that site to a developer, we won't necessarily need to write off that money.
Yeah, I don't have any anticipation of a write-off for King Offer at the moment. We will report in due course if there's more to say, but no anticipated write-off right now.
Is happy. Can we receive the accounts? Those are Councillor Gray, yes, proposes. Councillor Byrne seconds. Move that we receive the accounts. All carried. Excellent. NEMCON, I think that one. I think there was one person not voting. We now move on to risk management. Agenda item 7. If people do want to talk at some stage about the housing company, I shall need to go into closed session and actually ask Councillor Thomas to leave the chamber. I think at the moment, simply as it's stated, I don't need to do that, but I'm aware that some people may want to pursue it with figures, and that would be inappropriate. Now, Charlotte, you're going to introduce this. That's fine. Can I turn, therefore, to Anna? Welcome. Would you introduce this report?
Thank you, Chair. So this is the latest position with the corporate risks that are facing the Council at the moment. It's very much a live document. It changes frequently, but this outlines the position that we're in at the moment. Some risks continue to exceed the risk appetite score, and I've highlighted them in the report, and if it's okay, I'll just go through those with you. So the first one is risk number 2, financial. The high cost of rental accommodation, house prices and living expenses are increasing demands for temporary accommodation. So this is a risk that's exceeded the risk appetite score for some time and continues to do so. The next one is risk 3, economic and financial. So Ola and Charlotte have just outlined the position with the accounts, and that's failure to operate within a sustainable budget and hold adequate financial reserves. This score has increased from 20 to 25, and that's the highest level of risk that we have. We use a 5x5 scoring matrix. So for likelihood and impact, it's scoring 5 for both of those. The next one is project and programme. So project delivery compromise and project budgets exceeded. The score has increased because costs are going up because of the conflict in the Middle East. Everything is more expensive, as we know, and there are particular budget pressures around 4 of our major schemes. The next one is risk 10, which is the financial risk concerning the Rother Housing Company. Again, the risk has gone up from 20 to 25. So again, the highest score for impact and the highest score for likelihood. So this does reflect the very stagnant housing market, and we've already discussed the lack of market sales for this one. So in a nutshell, that's the latest position with the risks, but I'm very happy to take questions.
Thank you very much indeed, Anna. As you know, I had one question really to our advantage on risk 2 it seemed to me we had missed out one of the most important sources of mitigation. And since we're going on using it, I think it's worth mentioning. And that is, of course, that we're using capital at the moment to purchase temporary accommodation. And we have a large number of units, and we're about to increase that again. That is such an important mitigation, I think it's worth highlighting. Without that, I think the homelessness risk would be very high indeed. At Hastings, for example, I believe something like a third of the budget is going on homelessness at the moment. And the same is true as Eastbourne. Our corresponding figure, I think, is probably somewhere between 7 and 9%, which is really, I think, a tribute to what the Cabinet and Council have agreed. So I would hope that can be included. I will then turn to others for their questions. Councillor Byrne.
Thank you, Chair. Really, just to endorse your statement on the wonderful work that our officers did, that having the foresight to borrow at quite, I think we borrowed 9 million to purchase properties to avoid homelessness. We, at the time that we made that investment or made that borrowing, it was quite advantageous rates. And as you say, that's left us streets ahead of other authorities on something that they would be on their risk register, wouldn't be red, it would be sort of glowing and pulsating. So really we've got to say thank you to, we as members have got to say thank you to our officers for insulating the council, because for everything we've done there, it has meant we've managed to carry on doing some of the non-statutory things that our residents really like, which other authorities that are stuck with a bigger bill for homelessness are sadly not able to do. So thank you officers for your foresight.
I think, to be fair, members too deserve some of the credit. I don't think it was just the officers.
I was Cabinet Member for Housing at the time.
Yeah, but there was a housing task force, which takes some of the credit, and the Cabinet too, of course, decided to do it. So, although I can also share your view that the officers were far-sighted, I think the credit should be shared, to be honest. Tom, our independent member.
Thank you, Chair. And I would amplify what Terry has just said, and also for very, very concise report from Anna. But I have to, as a responsibility, I have to draw our attention and ask a question around page 133. It's risk number 3. And it's just, logically, we look at the resulting in section 114 notice, and we're saying that it's a 5-5. In other words, it's definitely going to happen. Or rather, the risk is going to happen. So all my question is, I have to ask it because all members ought to be aware of what section 114 is. And I just put out the question for an explanation of what the officers think. Thank you, Chair.
I think at this point, it may be advisable for Councillor Thomas to withdraw and for me to move that we go into closed session. Can I therefore move that from the chair? Have I got a seconder that, because of the sensitive nature of some of the figures involved, not all?
I think anything that's in this report, Chair, we don't need to be in confidential session.
We're going to get into the housing company, I'm sure.
Right.
I feel uncomfortable. I think we will go into closed session, because although some of this can be open, I think we better talk about the housing company first.
Chair, shall I explain 114 first?
before we move?
Yeah.
Yes.
We're going to take this in two parts, therefore. We'll take a public part, and I will ask Charlotte to do some explaining of the financial position. And then we will take a second part, which I will take in closed session, because we may want to talk about commercially sensitive matters in relation to the housing company. Richard, welcome back. We're going to take a public part first and then a closed part. Charlotte.
Thank you, Chair. Yes. So before we move into confidential session, I'll just explain what a Section 114 notice is and what the implications of it would be. So it's very much linked to the question we had earlier about the adequacy of reserves. A Section 114 notice is it's a statutory notice. It's laid out in Local Government Finance Act regulations. And it's a notice that we would issue if we were effectively headed towards, in layman's terms, bankruptcy. It's very much the end of the road in terms of the sort of statutory steps we would take if we found ourselves in really serious financial difficulty. It's not a step that we would take lightly, and it's not a step that I am saying we are at now. Just to be crystal clear with everybody in the room and everybody listening, I'm not suggesting that we are at Section 114 notice territory. What I am saying, though, is that we do have a very, very challenging financial position as an authority, and no member or officer should be unaware of that. We have very limited reserves, and we have some fairly significant risks, which we can discuss when we move into confidential session. And the most significant risk that we face relates to the housing company and the loans that we have provided to the housing company. So there are a number of steps that the authority would move through before we get anywhere near a Section 114 notice. And some of those things are things that we are very much doing now, and some of them are things that we've been doing for a little while. So the budget challenge process that we're in now, we've run for the last couple of years at least. The target that heads of service have been set this year is more challenging than it has been previously, and that's reflective of the more challenging financial position that we are in. I have been very clear with Cabinet that there will be some difficult financial decisions to take this year. We are exploring what our statutory cost base would be. We are exploring all avenues of our discretionary spend. We are starting discussions about what exceptional financial support is. So exceptional financial support is a stage that a local authority would get to before they get to a Section 114 notice. We would be in lengthy discussions with MHCLG before we get anywhere near a Section 114 notice. So you don't just issue one off the bat, the number of steps to go through. So the first step is for us to look really hard internally. If you look at the guidance, it's about the authority doing everything it can itself to help itself. And that includes evaluating all discretionary spend and budgets that we have. I have already explained to senior officers at the council that they'll have heard Section 151 officers before say, we're really short of money, things are really difficult, I need you to find savings, because every Section 151 officer has been saying that for at least a decade. But this really is a kind of call to action at this point. So we need to look really hard internally at all of our spending and critically evaluate the priority, linked to our statutory duties, linked to our corporate plan. We need to identify appropriate savings. We need to review our reserves. Then the next stage will be having an independent party look at our financial position and all of those decisions that we've taken. Most councils utilise SITFA to undertake that review for them. And And then if we've been unable to kind of resolve a problem, then we would commence discussions with MHCLG about exceptional financial support. Exceptional financial support is intended to prevent authorities needing to issue a Section 114 notice, which is why I'm saying we are a very long way from that point today. But there is a risk if we didn't take the steps that we need to take. Exceptional financial support is not as people might anticipate it being. It's not extra grant money. That's not what the government provide if you are in financial difficulty as an authority. They provide you additional flexibilities. So that might be that you can use capital receipts for revenue purposes that you wouldn't normally be permitted to do under our regulations. It might be that you can sell off assets if you have them, or it might be that you are permitted to borrow in order to fund your revenue expenditure. It's not a kind of silver bullet, and it's provided on a proviso of you having a plan in place as to how you would remedy your problems and move back to a stable financial position. It's not, although it's still called exceptional financial support, there is a large number of authorities now in exceptional financial support, which is reflective of the funding landscape for local authorities. So obviously if you want to discuss any particulars or specifics, then we'll need to move into closed session now. But yes, that is, I just want to reiterate, I'm not saying we are issuing a Section 114 notice. The question was, what is a Section 114 notice and what are the implications? So that's the position. If you did end up in that very, very extreme scenario, then it is likely that MHCLG would bring in assistance to support you during that time also. But as I say, we're some way off of that. So this is a sort of theoretical discussion.
I can't help feeling that means we're at 23 or 24 rather than 25, because 25 is almost inevitable. And I don't think we're quite there yet. However, comments please from Tom and anybody else who wants to comment.
Thank you, Chair. No, the explanation was really, really good. I just had to ask in case people weren't familiar with that. So no explanation. Thank you.
No other comment? Yeah, Councillor Biggs.
I'll double check. I think I issue it as the 151. I think as part of the statutory powers. I have never done one. I don't intend to do one, but I think it's the 151.
Thank you.
I don't see any further questions on that particular risk. Do you still want to go into closed session or do you not? No. In which case, I'm very happy not to go into closed session. Can I therefore move down the list really to one of the places where I think we still have a slight gap, which is almost certainly, again, we will fail our land supply target. Now, we are already scoring this as a major risk because that is quite inevitable, but it's not just financial. It has implications for the planning committee, which are not recognised in the way we phrase this risk. I'm happy to leave it to Anna how she phrases it, but I thought it right to draw attention to the fact that it does render us vulnerable to predatory developers, if I may describe it, may describe them as such, who will take very little cognizance of the fact that we are virtually 90% protected land, and they tend to go after the protected land because it's much cheaper for them to buy. So there is a real risk around there, which is to planning rather than to finance, which I think we need to recognise. I think we can go back to the recommendation, and is the risk register adopted in its current form with those amendments? Again, I'll move it from the chair. Anna, sorry, you wanted to talk.
Sorry, it's just for noting, actually. So we can take on board your comments, but it's the officer's risk register. So I'll take on board the comments and add the social and planning aspect, but this is just for noting.
That's right. So we don't adopt the register, we take note of the register. Yeah. Thank you for the correction. All in favour of that? Yep. Now we move on to agenda item 8, which is Treasury Management Report. Charlotte, you're going to introduce this one.
I am. Thank you very much, Chair. Yes, so as noted in the report, this is the outturn report for last financial year. And as we note in the report, we held investments of around 22 million at year end. In addition to that, we did have an investment in the housing company, as we've touched on, at 33 million at year end, which was a £23.5 million uplift during that financial year. For the housing company, we had interest accrued at year end of 2.595 million, and 1.87 million of that related to 25-26 accrued interest. And as Ola touched on earlier, we have that in an earmarked reserve. Outside of the housing company investment, the majority of the interest earned in year came from our Lloyds account investments, and total interest, excluding the RDCHC loans, was 646,000 in year. Our loans outstanding, so money that we owed to other parties, stood at 53.5 million, which was up from 28.8 million last year, reflective of, as I mentioned earlier, the need to borrow to support the capital programme and having exhausted a lot of our internal borrowing. Our capital financing requirement, which is a measure of our indebtedness and the value of the capital programme financed from borrowing as opposed to other means like capital receipts or grants that we receive, stood at 76.4 million, up from 50 million last year. As noted in the report, 37% of our current capital programme is financed from borrowing. So our CFR, our capital financing requirement, that measure of indebtedness I just mentioned, will continue to rise until that debt itself is paid down. You will note on your desks, I've just put an updated copy of Appendix C, which looks like this sheet here. Only because on my review of the papers this evening, I noticed there was an incorrect number that had been drawn through. The CFR that was in Appendix B in your pack was correct, so I've just updated Appendix C. It's only the outturn figures that had drawn through incorrectly. So I've just updated those in front of you. But as I say, the Appendix B figures that are in the pack are correct. The ratio of net financing costs at outturn was just over 8%, and that's, again, reflective of that same profile we've talked about during the year, where the amount of debt that we've held and the interest we pay on it has increased, and the interest that we've earned has decreased as we've utilised our balances. The CCLA investment, which is our only property our only combined property investment that we still hold now that we don't have Hermes, That original investment is down on value, remains down on value, but those property funds contributed £229,000 of interest in year, so they do continue to contribute to our overall picture. We will continue to monitor in 26-27, but in 25-26 we remained within all of our limits that we set for the Prudential Code, and other than the areas that I've already noted, we performed as expected. Happy to take any questions, Chair. Thank you.
Thank you, Charlotte. Paragraph 16, the waiver, which means the depreciation in capital value of CCLA, there's no chance of that being withdrawn.
We have no intention to withdraw. It wouldn't make sense for us to take the loss on that investment at this time. The only reason that that would crystallise if we ended up in the circumstances like we did with Hermes, where they had to close the fund. In that particular instance, that was because a lot of people withdrew their funds. I don't see any immediate signs that that's the case with CCLA. We've certainly had no correspondence. So we'll continue to monitor the CCLA investment in year, but we don't have any immediate intentions to withdraw that investment.
And we still get a very good return on it, so
yes,
it's worth holding. Are there any other questions on Councillor Thomas?
Thank you, by the way, for your earlier answer. That was extremely lucid and helpful. Thank you very much indeed. If you could explain the origins of the universe with the same clarity, that would be much appreciated. Can I just ask a question about the Treasury indicators here? You say that the gross external debt actual at quarter four was 53 million, and the remaining authorised limit for external debt is 83 million. Now that sounds as if it's a remarkably high ceiling, and that suggests that before we actually get into panic mode, there is a degree of flexibility there to reflect. Is that right? Or is it way, way out?
Thank you, yeah. So those limits we set each year when we set our capital investment and treasury management strategies, and we do them with reference to our capital programme and the commitments we've got coming up over the forthcoming period. We've actually reduced those, both the authorised limit and the operational boundary limit, in the last strategy. I've reflected the strategy that was in force at the time of year end here, which were those figures, but they've been reduced to around about 100 million, which would have been a lot less headroom. But they are reflective of our kind of upcoming commitments, so not just the commitments we've got at this moment in time, but that increased capital programme that we're continuing to deliver, which is why there is some scope. I mean, the authorised limit for your prudential indicators is intended to be reflective of your existing commitments, your known upcoming commitments, and take you to kind of be no more than the authority could tolerate, whereas your operational boundary is slightly lower because it's meant to be more reflective of a limit. Sorry, the authorised limit is something that you could maybe tolerate on a short-term basis, whereas the operational limit is more about what you could tolerate for a slightly more sustained period. As I say, they've actually come down in the last strategy document. I can't remember the exact number, but they're around about the 100 million mark now, maybe slightly lower for the operational boundary. So they're a bit lower, and as you'll have seen, in fact, that's the second year on the trot we've reduced them. But as you'll have seen, we have scaled back our capital programme as well, and that's why those have moved in track with the capital programme.
If the 83 million relates to a short-term debt that might just represent peak borrowing, for example, how much more could the authority tolerate before it was in serious trouble? Could it tolerate an extra 5 million, for example?
So that's, well, the authorised limit is meant to be reflective of what it could tolerate for a short period of time. So we tend to operate with around about a £9 million buffer between the two. As I say, those numbers are coming down, and part of that is the kind of risk profile. But they do need to reflect our kind of existing commitments in the capital programme. So they're not necessarily, it's difficult the way I've presented them here because it does look like it's just a one-year snapshot, but actually those limits are reflective of the capital commitments you've made for the upcoming 3 years as well.
Councillor Biggs.
Thank you, Chair. I'm not sure if this question relates to this item at all. Obviously, the negative side of things is the money that we've given to the housing company. On a positive side, as far as I'm aware, we have been getting money coming back when the houses are being let or being sold. And I understand that some have been sold. But I haven't seen anything on any reports to say we've received any money from that. And that's a positive. So, again, if I'm a member of the public looking in, it would be good if we have received money, perhaps to put it somewhere in our report or an agenda, so we're getting a positive feedback from that. Does that make sense?
Yes, so without getting into loads of detail, we can definitely build that into the next report. The housing company have made their first repayment of the loan. So up until now, there have been no repayments. So all of the interest, the 2.56-ish million already that's been accrued in interest, it's just what we call rolled up. It's accrued interest, so it's money that's owed to us. We haven't, up until Q1, 26-27, we haven't actually seen any of that money as yet. And that's not that anything's gone wrong. We didn't expect to see that money. That was the agreement. That's what the loan agreement says that all parties have signed. We have recently received the first loan repayment, which is reflective of the fact that some units have transferred to the affordable housing provider. So the housing company have made their first loan repayment to us. It's not reflected here because it doesn't relate to the period that this report refers to. But when we bring the Q1 report, I'm just looking at Ola to check it was in Q1 rather than slipped just into Q2. Assuming it was in Q1, I think it was, we'll update that in this report.
Okay, thank you. I think it'd be good for the public to know that we have got money coming back and it's not all been going one-way traffic. Thank you.
If there are no other questions, we can move to take note of this report. Again, I'll move from the chair. Councillor Biggs will second. Everybody in favour? Thank you very much indeed. We now move on to agenda item 9. We have sustainable procurement and social value policies. And we clearly want to look at these. Sorry, I'm just finding them on my agenda. We really have to agree these and support them, but they go to Cabinet for a decision. And we will then support the implementation of the policies once they have been signed off. So, are there any questions, any comments? Who would like to say something about them?
Thank you very much, Chair. Yeah, these policies have been created to give both suppliers and officers confidence in social value and sustainable procurement practices. The policies aim at guiding officers and suppliers in creating additional benefits for the community when going out to tender and through the life of the contract. They align to the corporate objectives of the council, and we create a common goal and framework for both officers and suppliers and bring a positive change within the district. As the policies have been created in collaboration with the ESPH member authorities, the aim is to create a consistency and a unified approach to social value and sustainability, especially with supporting the preparation for LGR. And we're happy to take any questions you may have on the policies.
Before I take any questions, I ought probably to have welcomed both of you Charlotte is here also from the procurement hub. So thank you for your attendance. Are there any questions? Councillor Byrne.
Thank you, Chair. If I read this correctly, there's an implication there that social value, very good, but in terms of procurement, financial consideration really does sort of at the end of the day trump things, and it's only if you have two almost comparable offers of a service or something you're procuring that social value will come into the mix. Am I being a bit pessimistic there?
As part of our evaluation of suppliers' bids, we take into consideration a range of quality and pricing criteria, so they're evaluated independently. So the social value and sustainability elements would be taken into consideration within that quality element. So there's no suggestion that the financial impacts would be influenced. It's a range of different things to ensure that we are achieving value for money and getting the most advantageous tender.
I'm taking it that you have a scoring system and that it would be scored.
Yes, that's correct. It's scored.
Are you happy with that, Councillor?
I am indeed. Thank you very much.
Councillor Biggs.
Thank you, Chair. I'm just reading your glossary. Biodiversity. One of the parishes that I represent has got I suppose you call him biodiversity man. He studies bees, wasps, flowers, fauna. It's a nature recovery alongside the parish council. He obviously counts throughout the years how many bees he gets and stuff like that. Is there someone in the council or rather into that where they're looking at species that are coming back or species that are dying? Is that part of this climate change and stuff? Is there an officer that if he wanted to get in touch with, would he be able to?
We've worked with Elise on this, officer of the council, so she helped us write both reports. So I would direct to her if they do want to speak about it.
Elise, I thought
Elise Manning.
I thought she'd left.
No. No. She's
Okay.
very much with us.
Sorry, can we stop
Oh,
this
sorry, we're having a little private
conversation through the chair, please?
Thank you.
Sorry.
Yeah, I know the lady now, so thank you very much. I'll put him in touch with her. Thank you.
Are there any further questions or comments? In which case, I think complicated motion that I've referred to at the beginning, I will move. Is it seconded? Yes, Councillor Gray. And let us, those in favour, please. Anybody against? No. So we pass that now to the Cabinet and we move on to agenda item 10, which is the review of the mileage claiming policy. And there is a minor amendment that we want, well, two minor amendments that we want to make to this policy. Effectively, we note the savings that have been made, and then there are two exceptions which are set out in paragraph 7 of the report. Both of them seem to me unexceptional, but if anybody wants to challenge them, now's your chance. In which case, can I move that we make those two additions to the mileage claiming policy? Seconded by Councillor Gray. Those in favour? Nobody against? That's fine. We move on to agenda item 11, which is the work programme. And I'm taking it that nobody wants to discuss this. Everybody happy with it? Good. In which case, all we need to do is to reaffirm that we support that work programme up to the 22nd of March. I don't think I need to put that to the vote. In which case, I'm very grateful to bring this meeting to a close at 7:57, I think.